Hold on, what does if it works mean? So when you say to somebody, if Bitcoin works,
Yep.
you ask them the probability.
Yeah, it had work already. Works is not the...
Well, this conversation we had yesterday with Drew, I was like, people say, well, if Bitcoin, does work. I'm like, it has work. I think we're there.
Yeah, but
I don't see a failure case for Bitcoin now. Like, obviously, there's remote chances, like catastrophic, but I don't see a failure case for Bitcoin now.
But the knowledge is not widely distributed.
No,
so
of course.
You know that, Danny knows that, I know that. Vast majority of people still think Bitcoin is worth zero, right, on their mind. Because they're not making this calculation, and they're not seeing that the total addressable market for Bitcoin is not, stocks or bond. They compare Bitcoin to Apple, for example, right? I hate when I see those comparisons because Bitcoin's not Apple, right? Bitcoin is the base layer where Apple is built, right? It's the monetary base for everything else, right? You should look at all the monetary assets of the world. People still not there. They still don't understand that. They will compare with other things like, how come Bitcoin can be worth more than company A, B, or C, right? And you can, again, because of all these things. I think as people start to realize that the total addressable market for Bitcoin is orders of magnitude of they understand, we're going to see this getting closer and closer to what I think is the fair value of Bitcoin, right?
So if someone came to you and said, what is Bitcoin? Because we did an interview recently with Quoth the Raven, and he said, like, how do you explain Bitcoin? I started explaining, he said, yeah, you've already lost me, you failed. And so I thought a lot about that afterwards. And so one of the things I'm thinking about is, there's two ways to explain Bitcoin. There's explain what Bitcoin is now, and then you can explain what Bitcoin end case is, right?
Yep.
And end state. And I think they're actually two different things.
100%.
And it's like, where do you start? Because a lot of the criticisms I think someone like Peter Schiff has is that he's discrediting Bitcoin's end state based on what's happening today. So he's measuring what's happening today.
Yep.
But using that as like it's at its end state. And I think it's a bit like when somebody said you can't go from 0 to $1 trillion in a straight line. Like Bitcoin has to be volatile. So how do you explain it? If someone new was coming to you and you said, like, what is Bitcoin? What is it? What's its role? What's its purpose? Why should I buy it?
As I said, I would say it's the best monetary fuel cell that was ever invented, right? So this is the asset that has a higher probability of storing your proof of work, of your work, your labor for the long time, right? For the long period of time. It's not going to do a good job overnight. Yeah, volatility is here, and we can talk about volatility because I think volatility is a feature, not a bug, right? But if you need to store your assets for a long period of time, in my view, this is the asset that has the best probability of doing better than anything else out there, right? Because other assets, either they've been monetized already, right? So when you're buying real estate, you're competing with all the capital that flew into real estate for the last 2 decades, 3 decades, right? Because they didn't have anywhere to go, and you're probably buying it closer to the top than you were. So the monetary premium, the monetization of these assets happened already. Bitcoin, it hasn't happened. So answering your question of where should this go, right? So Hal Finney actually wrote about it, which is mind-boggling, right? He wrote about this like in one of the early forums.
When he said about the 10 million Bitcoin.
$10 million Bitcoin.
Yeah.
And he went through it's like, if Bitcoin captures the monetary premium, or he doesn't say monetary premium, but he captures the value of these markets, this is where Bitcoin should be. So my bull case is similar to that. I just don't think that it happens overnight. If you go to Nakamoto Portfolio website and you go to the Schrodinger model, there are like 3 buttons that you can press there. There are 3 different scenarios. So you have the bearish scenario, the base scenario, the bullish scenario. So the bearish scenario is a price of Bitcoin today of $160,000 today. Okay. So it's already undervalued by 2x in the bearish scenario, right? And again, these are my scenarios. People can play around with the settings there. Mm-hmm. My base scenario is Bitcoin should be worth today $620,000.
It should already be there.
Should already be there. In 20 years time, it will go to $3 million. That's my base scenario. Then the bullish scenario is that in 15 years' time, it goes to close to $8 million, and today should be worth $2 million. And then I have a button here, which is the hyper-Bitcoinization button.
Okay, so tell me that one.
You click on that one, so you tell you that Bitcoin ultimately in 15 years will go to $24 million, which capturing the monetary premium of pretty much all of these assets with high probability. And today, if you believe that scenario, so If you're a Bitcoin maxi right now that really believes that hyper Bitcoinization is coming, anywhere between now and the next 15 years, Bitcoin for you today should be worth close to $6 million and not $72,000, $73,000 as we're buying. So good luck for people that understand this, good luck taking the Bitcoin out of their hands. You're not going to take it because you're nowhere close to the price that is the fair selling price for them in terms of Bitcoin.
So why are we not at that price then?
Yeah, so this is a great question. This explains volatility as well, right? People, Peter Schiff loves this. Like, this can be a store of value. It's super volatile, right?
Well, even who said it the other day? Was it Sorkin?
I don't know. What did he say?
Did he say?
Yeah, he did say something like that.
He said it was. It can't be a store of value. Did he say if it's volatile, it keeps going up? No, it has to be stable. I think he said it can't be a store of value if it's not stable.
Yeah, that's bullshit. I mean, at the process of capturing the monetary premium, first of all, it doesn't happen overnight. Second, the knowledge, as we discussed, it's not evenly distributed. So gradually people are going to know about that. And also, even the people that know about it, we all oscillate between our bull and bear case during bull and bear markets, right? Bull market comes in and everybody's saying, oh no, hyper Bitcoinization is here. The cycles are dead, right? Bitcoin is going to the moon, right? Forget about it. We're never going to have cycles again. We've seen that a couple of times, right? And in the bear market is the same thing. You have people saying, no, this is going to drop another 20%, 30% from here, right? And it's usually
going to 5,000.
Going to 5,000, exactly right. And that creates volatility because people are reassessing. They don't know, but intuitively in their minds, in all of our minds, we're reassessing the probabilities of Bitcoin actually succeeding based on of the recent past of what we're seeing, right? So as that becomes more and more distributed, and more people come in, and more people see that that's happening, and more people realize that the total addressable market of Bitcoin, it's not a stock, it's not gold, it's actually much bigger than all of that, right? Then if you move, and you see, if you move the probabilities here by a little bit, by a couple of percentages, the differences in price are massive because you're talking about very high potential value, right? The hundreds of trillions of dollars, that even with a small probability, given where we are right now at $1.5 trillion, right? I mean, the potential is massive. As I said, it's a drop in the ocean of liquidity that you have of all these assets out there that Bitcoin has a probability of capturing. Do I think that probability is 100%? Of course not, right? Do I think it's zero? Of course not. Is it somewhere in between? It's definitely. And people, again, can play and see, given their intuition about probability, where price of Bitcoin should be. And I guarantee you, most people get shocked when they see where the price should be.
Well, the funny thing is I don't even bother with probability now. I'm binary. It either captures everything or dies.
Zero. Yeah.
There's no in between.
Yeah.
And my view is that it's more likely.
But the in between is a framework of thinking, right? So it's the same thing when you do binary trees pricing. Do you know what binary trees are? Very simple. Okay. It's one of the most simplest ways of pricing any kind of asset out there. You basically believe that, today you start here, and then in one day, the price is going to be stock. Stock today is at 100. Tomorrow you wake up, and it's either going to be 110 or 90, right? And the next day you wake up, and the 110 is either goes to 120, right? So by thinking about these two scenarios, then, which both of them can happen, you just put probabilities to them. So it's not in between. You just say, I think, Bitcoin goes to zero. Is there a probability Bitcoin goes to zero in your mind?
No.
Zero. Zero.
I mean, I could come up with some kind of global regulatory
Peter, I have news for you.
Yeah.
You don't need to worry about allocating your assets anywhere else because in your mind, you already think that Bitcoin is the best asset out there, right?
Yeah.
And you shouldn't be, which I'm in the same camp, right? I don't think it should be worsifying into other things.
Okay, it's non-zero because there could be a global regulatory crackdown. But even then, I think there'll be safe havens. But even with those safe havens, the price is going to crash.
There's game theory because one country bans, the other may actually say, no, you can come here. Yeah.
There could be world war, and miners could be targeted, and something could happen with, I don't know, the difficulty adjustment, which means blocks take forever and it just becomes useless. There's lots of scenarios where, but I think they're far out. So there's scenarios where I'm whatever. I don't care. I'm there. I'm literally there to the point now whereby my only consideration for fiat is like my business is run on fiat, my personal life runs on fiat. I have to have some.
Yep.
And also I just kind of want to balance the cycles if they still exist, because I have to, like, I could put all my money constantly in Bitcoin, but there are times where I'm not going to. So, say we at the end of 2025 and we're at say 500,000 of Bitcoin, I'm probably not going to be buying Bitcoin then. I'm just going to be holding fiat. It's either dry powder if we drop, or it's just stuff I just spend on fiat, right?
This is a great point, because a lot of people start in the wrong perspective in Bitcoin. They're like, Bitcoin is not a medium of exchange, and because of that, it has failed.
Right.
But historically, getting to medium of exchange only happens way after it was a store of value.
Yeah.
Look at gold. Gold in China, right? When we talk about like the early days of fiat paper, right? Fiat was born because of gold, right? Gold has already failed because fiat, again, was born out of it. And the main reason was, you had all these coins and people were moving the coins around. Like, no, I can't be moving coins around. I get robbed, and then it's just heavy, it's clunky. So they put it somewhere in a vault in a bank. And then the government started giving you pieces of things, saying, no, here it is, Peter. You have a deposit of 10 gold coins with us, right?
Yeah.
And then you started trading that. Like, yeah, there's no point in you, Peter. Here I have 10 coins there. I didn't give you the coins. Here's the deposit. You can go there, right? And that's how paper was born, and that's how people started trading that, because it was much simpler than just getting the gold across, right? So gold has failed already. Not today, but like in the China, I forgot in which dynasty, but a long time ago it has failed, right? We just didn't realize because we didn't have better alternative. We are eventually going to have digital ways to get Bitcoin across. They're going to be much simpler, and that's going to happen. And even if that doesn't happen, even in Brazil in the 90s, we still use the Brazilian real, the cruzado or whatever it was called. We use the same. We know the currency was a shitcoin. We knew that it was going to go down. We knew that we can store it. But for day-to-day things, I don't care, because you get the money in the bank and then go give to somebody else, and that's it. So this medium of exchange is the last thing to die, and I think we're very, very far away from that. That's a multi-decade, end point. And even if we don't get there, it doesn't mean anything about Bitcoin. Bitcoin could capture, again, all the monetary premium that I just said without even becoming a medium of exchange between them.
Well, is it Gresham's law? Is it Gresham's law where you use the shit money first?
Yeah, exactly.
The good money falls out.
Yeah.
So just look, a great example. When I was in Lebanon, everybody wanted dollars, right? You pay with dollars, but they still had is it the lira or the pound? I can't remember. But anything that was like under $10 in change, they would give you in the local currency. So they're keeping your dollars and giving you that shit coin, and everyone's trying to get rid of it. Like, I naturally, and I think because we run these businesses as Bitcoin businesses as well as fiat businesses, we spend the fiat. We only keep as much fiat in the account for 3 months cash flow, right? Everything else goes into Bitcoin.
Yep.
And we spend the fiat. The only time we spend the Bitcoin is people who accept Bitcoin, who only want Bitcoin. We have to pay them in Bitcoin. And each time I regret it. It's like secret. I'm like, fuck, I'm giving them my Bitcoin. It's like, isn't this Gresham's law in play right now?
Yeah. And I think, there's a lot of debate in the Bitcoin community when you talk about Lightning, for example, or Liquid and all these other side chains, right? Or second layers, right? A lot of people don't like it because they say, well, this is not Bitcoin. Which is true. You should always prefer to have, the best thing to do is to have your own Bitcoin, your own custody, on chain. But for small amounts, if I'm going to Starbucks to buy a coffee, I can use Lightning. I can put, 10,000 sats in my app here. And if I lose my phone, not the end of the world, the same way that, I'll put $100 in my wallet. And if I lose the wallet, I'm going to be sad that I lost $100. But it's not existential, right? So I think we're going to get to, second layers that are actually very good, very liquid, very reliable, much more reliable than, using your credit card today. And again, it's not going to be as good as Bitcoin, but it's much better than what we have today, which is, again, this system that use credit cards and people just get over leveraged, right? And which doesn't make any sense.